candle to the upside, or it'd have to be a significant drop to the 1600s for there to be a move to the downside in the future. So that's quite a ways away unless momentum starts building up now. So we're looking for signs of that momentum to be produced, and the first initial sign would be for that supply area to be taken out, okay, on the weekly chart. That hasn't happened yet, so we just watch. So right now, trade signals on gold? No trade signals on gold. You shouldn't be trading gold at all because there's no high odds scenarios. So we stay away from it. Okay. USO, still keeping this in mind that we got supply in play. Okay, with respect to oil, and we can look at oil really quickly. We saw the latest rally up in oil. Why? Because of the weakness in the dollar, and we know that there's a negative correlation between the two. Price drops down into daily demand, and what do you think is going to happen? Likely going to continue higher. Why? Because the dollar, remember what we were talking about last week? Okay, there's room for it to drop to the monthly. Okay, now could this rally up here hit supply and then drop? Yeah, sure, that could happen too. Okay, lots of things can happen, but with price sitting at that demand zone right there, chances are it's going to go higher. But would I be trading oil right now? The answer is no. I wouldn't. Why? Because lack of trends, so forth and so forth. I can go on and explain to you what I've already explained many times. Euro US dollar, weekly supplies being removed, which leads me to suspect that higher time frame demand on the 6-month chart may be in play now. We've been watching for this move for a while now, and it may be starting right now. So we've talked about how there was a 6-month demand in play, and this could have come into play at any moment. But in contrast to that, we had positions held by the institutions indicating that some profits needed to be taken on long positions because they were holding such an aggressive long position. Remember, 260,000? When all-time max positions was 266, so what tends to happen is profit taking and then price drops. So they did some profit taking. Profit taking in order to get price down to weekly demand. Then that demand came into play and away we went. And this was always something that I laid out to you guys. I said, could they take some profits on long positions, reduce them slightly, and then come back in and aggressively start buying and then even surpass the previous maximum size? Maybe they're on their way to make max size 300,000. We don't know that. But that was a possibility because of that 6-month demand being in play, okay? That's why it was a possibility. And so now we see weekly demand came into play, and boom, price is now forcing itself to the upside and removing a supply, creating new demand. So this tells me that likely we're going to see more highs simply because of that. Okay. TLT still has demand in play, holding quite nicely. Let's see what it's doing this morning. Yeah, a little bit of down, a little bit of up, always the same thing until momentum, builds. That's what it's going to do. Nat gas remains in that range. Yeah, we've been seeing that for quite some time, just remaining in the range, a little bit of up, a little bit of down, but sits in that range. US dollar, how far can it go? That's the big question when it comes to the US dollar. We got significant supply in play. Price, look at the momentum candle to the downside on the 6-month chart, okay? So it's building momentum to the downside away from the basing. So that signals to me that more lows is coming. But the question is how far down? I mean, the next obstacle is that monthly demand zone. That's where my price target has been at for some time. But, how long is that going to hold for? Is it going to hold for, temporary? Or is it going to eventually, break through? Is it going to push price back up? A lot of things can happen. This zone can be removed and price head higher because it has been already tested a few times. Okay? So we're going to watch for this drop, see what happens off of here. see what kind of momentum shifts take place or don't take place. And when we see lack of proper structure suggesting that there's going to be a shift of momentum to the upside, then we can reasonably conclude that likely price will continue lower. Okay, but we'll get there when we get there. But these are things that I'm just pointing out as they're important. With respect to the stock markets, they've been strong, yes. Look at that, 2-hour demand comes down to 2-hour demand and starting to move up. Okay, beautiful. Supply is still in play, okay? I'll also point out that, you know, we've got serious buying, serious selling orders still there. Let me just zoom in here. Okay, look at that. Now, as you can see, June 20th, why is that cell a little bit darker? Because that's where contracts were expiring. Remember what I told you? A lot of times the banks will use contract expirations as a time to make a significant move. What move did they make here during contract expirations? They reduced their shorts from 589,000 down to 449,000. That's significant, okay? So this move up to me was formed by shorts being closed, okay? Because when you're flooding the market with sells, you got to find people that are going to be willing to sell. And if you're flooding the market with a lot of sells, you got to go higher and higher to find those orders, right? So if you're shorting, if you're actively adding short, it forces price down. When you're closing them off, it pushes price up. So there's a lot of talk in the newspapers, and we've been talking about this for quite some time, right? All the newspaper articles were saying market's going to be bullish, market's going to be bullish, market's going to be, everybody was saying market's going to be bullish. And now the market is bullish. So everybody's like, aha, this is going to be my next opportunity. But like when you really put things into perspective, what's happening? The banks are closing shorts. That's it. Okay? So do you want to go long when the banks are closing shorts? Not really. Not me. I'm not interested in going long when the only reason why it's going up is because the banks are closing short positions. No way. So I'm not completely sold on this idea that we got a bull market. Okay. I know a lot of people are talking about that. Oh, we got a new bull market. No, a bull market is significant demand coming into play within an uptrend and the banks are actively buying. That's a bull market to me. Okay. If that's not what's going on, then there's no bull market. So that's not what's going on. Okay. So to me, anything can happen. They can still reverse price to the downside and push down price significantly. So just pointing out that, let's take a quick look at the NASDAQ. Okay, same thing with the NASDAQ. Yeah, it's removed monthly supply. So what? So what? It can still drop. Okay, we still got weekly supply that was quickly tested here. Now it's penetrating deeper. Could it go down? Yeah. Yeah, it could. Right. So I'm not completely convinced of this move to the upside that it's going to be sustainable. Could it end up being sustainable? Yes, it could. Okay, it could. But there'd have to be new buying from the banks to sustain it. They'd have to switch from focusing on closing shorts to focusing on accumulating longs. And we don't see that. So we cannot conclude that. At this time, we can't say. All right? We just have to point out and look at what's really happening and remember that and take what we know to be true and apply it. That's it. Okay, so gold, you know, they're adding some longs, 220 to 235 to 240, and then we see price rattling up into supply. The dollar is currently dropping and it has room to move lower until demand comes into play. So this will put pressure to the upside on gold. Bottom line, is gold tradable? No. So, but I'm pointing out what is likely going to happen based on what's taking place with the dollar. Okay. Institutional traders have a neutral sentiment. Okay. Do you want to be trading gold when the institutions are neutral with gold? No, you don't. What do you want? You want momentum to be building in either direction. and you want the technicals to support that momentum based on higher time frame zones coming into play and structures being created. That's not there, stay away. Oil, sentiment neutral. Okay. What do we see with their positions? They're reducing their aggressive shorts that they had. That aggressive shorts, which, push price to the downside. That's it. Are they really focusing on longs right now? Not really. Have they increased them? Yeah, 316 to 339. Big deal. Prior to that, they were at 338, okay, before they dropped it to 316. So there's no consistency here. There's no sustainability in terms of the adding of long positions. So it's neutral. Do you want to trade something that looks like this? The answer is no, you don't. So you stay the hell away. US dollar, sentiment neutral. There was a tinge of bullishness. Now it's heading back into neutral territory. Look at the column on longs and shorts. They're both blue. Do you want to be getting in when the columns are cooled off? When both longs and short positions are cooled off? The answer is no. Gold and the US dollar have an inverse relationship. So trade signals on gold will help us understand US dollar direction, right? But so far, no trade signals on gold. Okay. Likely pressure to the downside because of what we're seeing, but no trading opportunities as far as I'm concerned. Let me tell you something. If I see price come down to the monthly demand zone, and then I see that they're starting to aggressively get into long positions, and I see on the euro they're starting to aggressively get into short positions, and I see proper momentum shifts on the daily chart producing nice demand zones, will I take a long? Yes, sir. Okay? Yes, sir. Because everything will be in correlation with each other. I see the banks buying. I see the demand coming into play. A triple tested supply area on the higher time frame, suggesting that next drive up will remove the area. That's a high odds scenario, just like what we were doing in class. Do I know for a fact that that daily momentum shift's going to hold off that monthly? No, I don't. Why? Because the monthly is not uptrending with the monthly demand. That would be a higher odds. Monthly demand coming into contact within a monthly uptrend, that would be higher odds, but that's not the scenario here. It's ranging, right? Because the demand zone's already been removed. But it would be a decent odds trade based on everything we know to be true about the current scenario, and then seeing the banks pile into long position. That is what I'd be watching for. So until something like that presents itself, there's no trades here, okay? And because the US dollar in its direction is so correlated with the other currency pairs, you see how it would be foolish to not wait for that signal on the dollar before, concluding which direction the other currencies are going to be moving in. It'd be foolish. So we've got a lot of time on our hands here to wait for those high odds scenarios. Otherwise, any other trades you're going to take, find your niche, short-term trades off of smaller time frame zones, wait for the signals on those lower time frames, trade that stuff, fine, if that's what you want to do, okay? In the meantime, what I would be working on is focusing on learning, journaling, okay? This is what you should be focusing on, so that when price does come into those demand zones on the monthly chart, because this is going to happen really quick. Before you know it, you're going to look back and say, oh my gosh, we're already in that demand zone and we're already shifting momentum. How did we get here so quickly? Because things move fast. They do. So those opportunities will be here before you know it. And you just want to be mentally prepared when those opportunities come. You want to have a journal full of notes that you can look at, so it could build that confidence in you that you know what you're doing when you're about to do it. Aussie, it's been about opening shorts and closing shorts all the time. And now all they're doing is closing down those shorts, which is helping to fuel a move to the upside off of that demand zone. That's all there is to it here. Was there a short-term trading opportunity to the upside just off of that demand? Yeah, you could have done that, but long-term sustainable moves, I don't see anything that's a long-term sustainable move here. If the dollar drops a little bit more, it has the potential to reverse to the upside. So that means, yeah, we could see a little bit more of a move to the upside before it turns over. So I'm not seeing anything here. You know, the banks have just been adding shorts, closing off shorts. So there's no real direction, no real momentum, no real structures here that the banks are creating. So it's not something I'd be interested in trading. US CAD, okay? Its movements will likely be somewhat unpredictable until something more sustainable is in play. I, pointed this out. Sherlock, remember what Sherlock says? Sherlock suggests we wait and see what direction the banks want to take price. Bias is downwards. Okay, and that's been there for multiple months because we have higher time frame supply in play. Remember what I'm saying about the US dollars, we have massive supply in play. You go to the US CAD, what do we have in play here? On the 6 months supply. So pressure will be to the downside. But currently we have weekly demand in play, right? And look, it created a demand here. What do you call it? A dynamic shift demand here because there wasn't a trend line. And remove that, created that, removed it. Now we have supply. Now we have a trend line. That's a key trend line for me, folks, right here. Key trend line. That's why I labeled it key trend line. Because it's either momentum is going to shift here and take this out and create a demand and use that to propel price higher, or this is going to hold and price is going to move lower, breaking through here. Now, what do we say with the dollar? It's got room to drop, right? So there's going to be pressure to the downside here. So would I be surprised if this trend line to the downside holds and this demand zone starts to break through? No, I wouldn't be surprised. Only problem is monthly chart. Look at all this price action. How far do we go? So because there's no indications on the monthly chart of how far we're going to go, I look at the weekly chart. But then I see this and I'm like, well, this is just a bloody disaster. There's nothing here. Price can easily drop down to here. Easily. Because that's your next zone. So trading opportunities, yeah, I'd say short-term or medium-term shorts, yeah, pretty decent odds. Okay. But again, what's going to happen when price hits this demand zone here? US CAD is kind of indicating to us that there's a good chance that we can see a lot of weakness in the dollar because there's a lot for it to fall. And remember the US Swiss, massive supply in play. Demand just got removed. So this is opening up for a move much further down if it wants to get down there. So those charts are really indicating to us that the US dollar can be very weak in the coming months, multiple months. So we might have short signals here. That removal of the weekly demand will be key. I'd be looking at the weekly supply that removes it and the daily supply that removes it, and I'd be taking trades off of those two areas. To the downside, similar to what we just saw on the chart in our class, once that weekly demand is removed, price will be heavy. That's the only roadblock here. It's like the dam. Once it breaks through, that's it. So would we like to see the banks accumulating shorts? Yeah, I would. They just finished offloading longs. Okay, 90,000 back in March 2023. Now we're in cooled off territory. We just passed default positions of 39,000. Now getting very cooled off. Okay, and this is at contract expirations. They turned aggressive longs into cooled off longs, and they turned cooled off shorts into aggressive longs. Cooled off shorts into aggressive shorts. So is that an early indication that price is going to shift momentum and start dropping? Yeah, it's decent. It's pointing in that direction, considering what we know about the dollar. Wouldn't you guys agree? Right? All logical. Everything I'm saying is logical. Okay? Everything has to fit. The more logical, the more probability that something is going to happen, because everything happens for a reason. It's not random. Price action is not random. Everything happens for a reason. So once you understand the reasons, then you can understand the logic. Once you understand the logic, you can apply the logic to different scenarios and come up with conclusions. So that's what I'm watching for. US Swiss giving indications that it wants to drop. Longs, shorts are both cooled off, so we wait for some more assurance there. Euro, strong bullish sentiment. Okay, it's been strong bullish sentiment for the longest time. Okay, look at longs, always been aggressive. Look at shorts, always been cooled off. Okay, and now we see the aggressive move to the upside. So we got to watch and see what happens. Okay, we've already talked about this one in detail, so we'll move on. Pound, US dollar. Banks increased their longs from 2. I should have highlighted this section here in red. When it's in red, that means it's near max size. Okay, that's what it means when it's in red. It's near max size, so that you has a visual representation. See here, price started its rally upwards. The banks added aggressively to their longs from 96K to 111K. It's highlighted in red because we're at maximum size. And look how far away we are from that monthly supply. Isn't that distance from where we are now to that monthly supply kind of similar to the distance between where the US dollar is and the weekly demand zone just below it? Wouldn't you say it's just about the same? Right. So doesn't that kind of lead us to suspect that we're going to get that little bit more of a push and then we're going to see the reversal? Right? Let's look at the positions held by retail, because last I checked, the retail traders were 93% short. Now they should start offloading those shorts at some point. Let's see, and they were very aggressive with their shorts on pound. Yeah, 88%, euro 93%. Yeah, it's up there. So they're going to have to offload those and start going in long at some point. They're going to take their loss. And then I suspect that's when the banks will shoot price to the downside. Okay, they're at 111,000. Their maximum size ever was 123,000. They're going to get to the point where they're going to have to start taking profits, and price is going to drop. Okay, a little bit higher, hit supply and then drop, probably. Would when price gets to that monthly supply zone on the pound, look at the structures on the daily and see what happens. Look, this is decent. Look, very decent. This structure, this trend line, okay? Why am I pointing it out? Well, because if price comes a little higher and hits it, it could break, produce supply, and then away she goes, and that would be your short signal, okay? So that would be a decent trade idea, okay? US dollar, Japanese yen rallied up to the supply where we had our target, dropped, removed demand. So even the US dollar, Japanese yen is indicating to us that more lows are coming, okay? Because of that removal of that weekly demand zone. Okay, so we'll watch for that. And again, they reached, a very aggressive amount of long positions where last time they reached that amount, they took profits on their longs, which caused the move down. And again, they're doing the same thing. We can see 159,000. Latest set of data is 147,000. They're not even focused on shorts right now, okay? And last is the Kiwi. It's not moving from any type of zones. It's just following what the rest of the markets are doing, okay? There's your interest rates for the currencies. Pro watch list and trade ideas. So these are some of the forecasts that worked out to perfection. Whether you took trades on it or not were up to you. I took trades on some I don't. Like I've told you, not all the trades that I take I share with everybody, because a lot of the trades I take are based on new concepts that I'm developing, and I'm just trying to see how well they work. Sometimes they work well, sometimes they don't. I've been getting a lot of good success from a lot of different things that I'm trying out. But unless I have something consistent that I know works very well, and I have a good set of rules to use when trading it, I don't want to really release that sort of thing. But you're here, you're learning the concepts, principles, you get the concepts, you understand. So many ideas to trade from, and most of them have been winners. Okay, things to watch for: silver, and so forth. US dollar, Japanese yen hitting our target from our forecast. Remember Amazon, I gave this trade signal a while ago. It's been rallying. This is what I would do if the 2-hour demand gets taken out. I'd exit the trade because daily supply has been contacted, and I wouldn't feel comfortable holding it if that 2-hour zone got taken out. Okay, 2-hour, the daily supply is quick test drop. So what do we know to be true about those zones? They usually drop, right? So that's why comes up, hits it, boom. I would be interested in getting out once this structure broke through. Okay, good sign is that it broke the weekly supply zone. Okay, by a little bit of a trade through, but still out. So that opens up the pathway for a move up to the target that we have here. Okay, so that's it. A lot of trading ideas, a lot of information, and there you have it. Any questions? If not, I'm going to let you guys go. It's been 2 hours and 15 minutes. I am tired. I'm exhausted. My brain just needs to chill now. Oh, God. Oh, shoot. Oh. And my shoulders are tense like mad. Okay, good session. Everybody good? I put out a question there on Telegram as to whether or not you guys knew of any good book review sites that are not owned by Amazon, because everything seems to be owned by Amazon. Goodreads is owned by Amazon. Library Thing is owned by Amazon. It's like Amazon bought all the good websites. It's incredible. Marvin, thanks. Yes. Michael Dunn, thanks. Sharp Lesson, thanks. Okay, good. I'm glad you guys got something from it. I always get something off of it as well. Okay, that's it, guys. Enjoy the rest of your day, and I will edit this and upload it when I get a chance. And that's it. Enjoy your day. Thanks for joining. Take care.
This is Axel Rose, your host for MTX 2023. Join me at this year's biggest trading event in Mindanao on August 18 and 19. Get ready for informative sessions, exciting exhibits, and networking opportunities with industry experts. Don't miss out and click the link below. See you there!
Get ready for an extraordinary event that will revolutionize the way you trade. Introducing the Mindanao Traders Expo, a 2-day extravaganza dedicated to Forex, crypto, and stock market enthusiasts. Prepare to be inspired by our lineup of exceptional trading mentors, sharing their expertise and strategies to help you master the world of trading. Whether you're a seasoned trader or just starting out, the Mindanao Traders Expo offers a platform for learning, networking, and exploring exciting opportunities. Connect with fellow Forex, crypto, and stock market enthusiasts, expand your knowledge, and build valuable relationships with like-minded individuals. Unleash your potential with in-depth workshops on Forex, cryptocurrency, and stock market trading, covering everything from fundamentals to advanced strategies. Immerse yourself in the world of trading through our interactive sessions, where you can practice trading in a risk-free environment. Explore the latest technologies, tools, and platforms offered by our invited Forex brokers, gaining insights to enhance your trading journey. Don't miss out on this extraordinary opportunity. Join us at the Mindanao Traders Expo on August 18th and 19, 2023, in the heart of Davao City. Reserve your spot today.